Have you ever wondered what the best way to invest your money is? If you have $100 and don't know what to do with it, stick around until the end because I'm going to show you 8 ways to invest and what could happen to your money in each one. Some of these options are safe and stable, others can make you a lot of money quickly, and some, well, they might make you lose everything. But first, go ahead and like this video because it really helps the channel grow and reach more people with this content. Also, subscribe so you don't miss the next videos, which are getting better and better. Now let's get started. The first way to invest $100 is the simplest and most recommended for beginners: investing in an S&P 500 index fund. This fund basically tracks the 500 largest companies in the United States. So instead of trying to guess which stocks will go up, you simply invest in the top 500 all at once. Sounds good, right? That's because it is. The S&P 500 has had an average return of about 10% per year over the past few decades. This means that, on average, your money doubles every 7 years. And the best part? You don't have to worry about picking individual stocks. It's a way to invest passively and let time do the heavy lifting. Now, how do you do this? Simple. You can go to Vanguard, Fidelity, or any other major brokerage and look for funds that track the S&P 500. With just a few clicks, boom, you're now an investor. The second way to invest $100 is through REITs, or real estate investment trusts. Think of it like this. Imagine you and 3,000 other people pool your money together to buy real estate. With that money, the fund purchases buildings, shopping malls, office spaces, and rents them out. Then, it takes the rental income and distributes it to you. Basically, you're making money from real estate without having to buy any property yourself. The best part? By law, REITs are required to distribute 90% of their profits to investors. This means you get recurring payments, like dividends. Plus, the average return of REITs in recent years has been even higher than that of the S&P 500. If you're in the US, you can invest in funds like Vanguard's VNQ. If you're outside the US, you can look for international options available through your brokerage. The third way to invest $100 is by buying and selling products. This one depends more on your knowledge than on the financial market. The trick is to find cheap products and sell them at a higher price. Simple, right? It can be anything: used electronics, books, branded clothing, even Pokemon cards. Speaking of which, did you know that Logan Paul paid over $150,000 for a single Charizard card? Crazy, right? So, if you can spot opportunities, you can turn that $100 into much more. The secret is to buy low and sell for the best possible price. Facebook Marketplace, eBay, and thrift stores can be great places to find deals. Now, if you want to increase both risk and reward, the fourth way to invest $100 is by buying individual stocks. Here, we're entering the realm of calculated bets. Unlike the S&P 500, where you invest in 500 companies at once, here you pick just one or a few. The problem? If you choose wrong, you could lose everything. But if you choose right, you could multiply your money quickly. So how do you pick good stocks? One of the most common methods is fundamental analysis. You look at a company's financial statements, check if it has strong revenue, if its market is growing, and if the leaders are good. Nowadays, sites like Yahoo Finance make this process much easier. But if even top experts can't predict the market's future, could luck actually work? Well, there was a famous experiment where scientists had 100 monkeys throw darts at a list of stocks. The result? The monkeys ended up picking stocks that outperformed many Wall Street fund managers. So, why not test it out? Imagine putting up a board with various stocks, throwing a dart blindfolded, and investing in the one you hit. Could it work? Maybe. But we do know that this type of investment carries a medium to high risk. Now, let's step into the world of riskier investments. The fifth way to invest $100 is through cryptocurrencies. Bitcoin, Ethereum, Solana, you've probably heard of some of them. Bitcoin, for example, was created in 2009 and has delivered massive returns for those who invested early. To give you an idea, $100 invested in Bitcoin back in 2015 would be worth over $5,000 today. Yes, a 5,000% increase. But be careful. The same volatility that can make you a lot of money can also make you lose everything. Want an example? In 2017, Bitcoin hit a record high. But those who bought at the peak and sold a year later lost over 80% of their money. So, if you want to get into crypto, do it knowing that you can make a lot, but you can also lose everything. Now, before we move on to the final investment methods, comment below which of these strategies you've tried or plan to test. I want to see who here already has some investment experience. The sixth way to invest $100 is by putting your money into sector-specific ETFs. While the S&P 500 invests in the 500 largest companies, sector ETFs allow you to bet on a specific area of the economy. For example, let's say you believe technology will keep growing in the coming years. Instead of choosing a single stock like Apple or Microsoft, you can invest in the XLK ETF, which tracks the entire tech sector. If you think renewable energy is the future, you can invest in the ICLN ETF. Or if you believe healthcare will always be essential, you can look into the XLV ETF. This gives you broader exposure to the growth of an entire sector without having to bet everything on a single company. Now, if you like a bit more adrenaline and want something different, the seventh way to invest $100 is through startups. That's right. You can invest in companies that are still in their early stages before they become giants. Platforms like Start Engine and Seed Invest allow regular people to invest in startups in technology, biotech, energy, and more. Of course, this is risky. Many startups fail before they succeed. But if you invest in a company that grows exponentially, your investment could multiply by 10, 50, or even 100 times. Think about it. What if you had invested in Amazon when it was just a small online bookstore? Now, speaking of high risk and massive potential returns, the eighth way to invest $100 is betting on IPOs and explosive growth companies. An IPO happens when a company goes public for the first time. Often, these companies already have strong reputations and attract a lot of investor interest. For example, when Facebook had its IPO in 2012, shares were priced at $38. Today, even after recent downturns, early investors have still made huge returns. Another way to find high-growth companies is by looking at emerging sectors like artificial intelligence, quantum computing, and biotech. Tesla, for example, was once considered a crazy bet. But those who invested early saw their money multiply many times over. Of course, all of this comes with high risk. For every Tesla, there are hundreds of companies that fail. So if you go this route, have a strategy and never invest money you can't afford to lose. Now, before we wrap up, an important reminder: investing isn't just about where you put your money, it's also about your mindset. If you invest $100 expecting to get rich overnight, you'll be disappointed. But if you invest consistently, even in small amounts, and reinvest your earnings, time will work in your favor. The biggest mistake people make is giving up too soon. Just because an investment drops today doesn't mean it won't recover tomorrow. The key is patience, discipline, and continuous learning. Now, I want to hear from you. Which of these strategies sounds most interesting for investing your first $100? Or have you already tried any of them? Comment below. I read every comment. If this video helped you, don't forget to hit the like button because it makes a huge difference. And if you're not subscribed to the channel yet, subscribe now so you don't miss out on more content like this. See you in the next video.